Hi guys, Harvey here, the Remote Property Investor, and this is the January 2022 market update. This is not a normal market update. This update is going to be a prediction. Are we going into a property crash? Is 2022 the time when the bubble bursts? So we're going to discuss the market. We have a little preview of last year. We're going to discuss the market going forward. So make sure you stay to the end to get my predictions on what's going to happen in 2022 and my views on what you should be doing to make money in 2022. But before we get into that, if you're new to this channel, make sure you smash that subscribe button. In fact, you don't have to smash the subscribe button. You can just gently stroke it if that's easier, because you don't have to break your phone. But what are you doing? Just hit that subscribe button, get subscribed, hit that bell notification to make sure you get notified every time we do videos. We put out videos all the time, loads of content. My wife's to live on my terms. My mission is to help as many people live on their terms as possible using property, financial education and mindset as a mission to do that. So please share, like, and let's get this message out there. So 2021, what a year. Everybody was, from 2020, everybody thought the market was going to dip, and we've just had nothing but a strong property market. The market has been on gangbusters, going up and up and up. And yeah, the results are that not just property market, cryptos, stock market, pretty much every asset class has been expanded. But there's also been an expansion of monetary policies that's been pushed into the economy that is a big result of this. In America, they sent out checks, £1,500 check, $1,500 checks to everybody in America. And I believe it was over 60% of them people, not exact figure there, but it's over 60%, around that figure, of them people put money into either cryptos or stock market. And with the ease of getting into asset classes today, so it's easier to get into property than it's ever been with the education out there. It's easier to get into the stock market, into cryptos than it's ever been with eToros and crypto. I remember when I first done cryptos, it was so difficult, but it's the barrier to entry is lower and there's more wider news around it and a lot of hype. So all the markets are up, but is this set to continue? Well, I'm going to give you my views here. There's many arguments around will it continue. So last year, towards the end of last year, inflation went above 5%. In America, it's above 6%. So inflation, the governments are worried. We had our first interest rate rise since before the pandemic, which not a massive one. So it went from 0.1% to 0.25%, but still significant move in the monetary policy and the bank's eyes. So we had interest rise. So is inflation running out of control? Are interests going to go up? If interests go up, that will lose confidence in the market. It will make it harder to borrow. So this could be one of the triggers to create a crash. There's loads of marginal. So we'll talk about the wider economy as well as the property economy as well. So there's loads of marginal investing, and what marginal investing means, if you're not familiar with it, is people have lent money and they've invested with that loan money. And what happens when you get a bit of a shock in the market, like crypto's had a little bit of a shock recently at the time of recording this, but when you get a bit of a shock in the market, people panic, and the unsophisticated investors, they're investing off a hype. And when they get shock in the market, and because they borrowed that money, so they loaned £1,000 and they bought some cryptos on their credit card or some stocks on their credit card, and the market dips a little bit, they get panicked and they think, I own that money. So this is really dangerous for the market going forward. So much so, Michael Burry, the guy from The Big Short, the film, if you've not seen the film or you've not read the book, he's the guy that shorted the mortgage market sort of crisis in 2008. He shorted that market at the time and obviously done well from that. He's predicting that this is what's going to happen. There's lots of views around the markets, but again, nobody's got a crystal ball. I'll give you my views a little bit on the end, where I think it's going this year and what I think to do, but just giving you a little bit of context around the markets. Employment, we've got to touch on employment, we're going to talk about economies. Employment's like, again, it's really getting tough to employ. In businesses, it's tough to find employees. So we thought the market would fall off the edge. We thought it'd fall off the edge once furlough ended, but still really going strong with employment. There's a lack of employment. I don't think a lot of people are realising the effects of Brexit. Obviously, we see the fuel crisis. If you go in your supermarkets at the moment, the shelves are really empty, and it's kind of being hidden. I heard a lady, I was on a Zoom call, a network event, and the lady said, look, I worked for supermarkets bringing stuff in, and they said the supermarkets are hiding it away. They've packing the shelves. The other day they couldn't hide it. They were just really, really empty. So there's a massive impact on employment. But again, going back to the inflation, one of the big impacts with inflation we've had has not just been the amount of money, because usually when you print a lot of money, put it into economy, people spend. But it's a double impact with inflation, because people got more money in their pocket from being accidental lenders, accidental savers, should I say, because of COVID. They wasn't going out, they saved more money, so they got more money in their pockets. But also, more money got pushed into the economy with all these bounce back loans, with these mortgage holidays, with these credit card holidays. So there was more liquidity in the market. But then to add to this inflationary pressures, supply lines were shut down in the first lockdown. So all your building supplies, all this stuff just stopped getting manufactured. So that's caused a knock-on effect. So they're playing catch up. But if you study people like Cathie Wood, especially like in like the chips for your mobile phones, chips for cars, that's why cars are inflated so much. There's really behind it. But Cathie Woods is saying, if you've not come across her, check her out on YouTube. She's actually saying at the So if you follow Cathie Wood, she's saying that most of these have caught up with their manufacturing needs, and it's just filtering through at the moment. Like wood, Russia apparently chopped down loads of forests, and there's loads of this supply line coming through. But there's also a big deflationary factor going on. Because of COVID, loads more people got into tech, and advanced tech where it was going. AI was advanced anyway, and it's really advanced that because of COVID. And artificial intelligence is going to take over a lot of jobs. We've got deflationary things. We can produce things quicker with artificial intelligence. So there's debates out there either way. And then with the announcement of with Facebook changing their name to Meta and the Metaverse, that's not an announcement for Metaverse. This has been worked on for a while, especially related with cryptos. It's a really changing space. We're really going into a tech space. So it's going to be a really, really interesting times. And there is, whenever there's massive changes, massive opportunity, and we're going through a big shift in a humanity change, like it was from the industrial revolution, from the agricultural revolution to the industrial revolution. We're going through a mammoth, if even that's a word, change like we did then. So let's get to the part, what you've all been waiting for, predictions. What's going to happen in 2022? Should we be getting into a buy-to-let? Should you be getting property? Is the game over? So I'm going to talk mainly about property. I think the markets let's talk about cryptos and the stock markets. I think we're going to see a slowing down. They're talking about the tapering effect of the way the Monetary Policy Act and the bonds in America, which will affect the whole world because the dollar is a reserve currency. I'm not going to go too deep in this video about that, but check that out on YouTube, other people's videos around that, because it will affect the world economy. Could we hit a bubble burst? Yes, but I don't believe we're just there yet. I feel there's still a little way to go, but I feel all asset classes are going to slow down. Going into property, I feel the asset is going to slow down throughout this year. I still feel we will get growth. But listen, don't bet your money on this. This is just my opinion, so just getting that clear. I'm not a financial advisor. This is not financial advice, by the way, as well. So just also getting that clear, just giving you my opinions. But yeah, I feel we're going to give it a slowing down. I feel there's more opportunity coming through with more deals. But as in, is buy-to-let dead? I feel buy-to-let has been dead for ages in and around London and the South. I feel there's an absolute massive opportunity in the North, and the last chance opportunity. I think we've got maybe a 5-year window for vanilla buy-to-lets to work. I'm a firm believer of getting a good solid portfolio of single let properties first, get foundation them, giving you a good income, give you some good experience, level up with that, and give yourself some good confidence as well, because doing bigger, the only thing that's going to work in the South, the only thing that works in the South at the moment is really commercial conversions, larger HMOs. But if you're not experienced, there's a lot of danger of you messing up on them, and a lot of danger of you going sort of pop and bust on them sort of deals. So that is okay for some people to do, but I don't advise everybody. I think having a solid foundation of single let portfolios is the way forward. Just imagine if you live in the South and you're interested in property, do you wish, and you're not into property, or even if you're into property, do you wish you could rewind back in time and buy properties in and around London when the rents was around sort of £600-700 and the purchase prices was around 120s? If the answer is yes, stick it in the comments, because that opportunity is in the North at the moment. There's loads of industry, and with this tech and with people working from anywhere, and with big companies realising they can place their businesses anywhere, and with the fact of the pass of the North deal, I think this is just pushing on and pushing on. The opportunity opportunity in my area in the northeast. The northeast grew more than London. London was flat last year, and the reason behind it is the price per earnings ratio and the cost. Investors are now tired of buying 400k flats that rent for £1,600 a month and it's got a £2,000 a year service charge on it, and they're just going to earn like a 3% yield. So the opportunity is massively in the north still. That won't be there forever. It's going up the north. You see all the cities in the north, even the northeast that's been over the last decade behind on capital growth, is all going up. So my encouragement is, if you're I think the bigger stuff's going to work. It will always work going forward. But if you're at the earlier end of your journey, look at remote property investing. If you don't live in the north, if you live in the north, look at getting into some single let properties. Build that solid foundation and skill and confidence to start leveling up, scaling up onto the bigger stuff, because that's the only stuff you're going to be able to do in the future. And if you've not got the confidence, you've not got the skills, you've not got the lendability to do that, and the back track record, is going to be difficult. So I encourage you to get going with that. I'm the remote property investor, so reach out to me if you want any advice around finding a remote location, or how you do this all remotely and live on your terms. I've been doing this for over around a decade now, so I'm happy to answer any questions, give you support. But listen, remember, if you don't evolve your ideas, you never live on your own terms. Make sure you smash or even stroke that subscribe button, the bell icon, and please give this a share. And yeah, live on your own terms.